and more specifically, what the fake trading gurus didn't tell you. That's what I'm going to be talking about over the next number of minutes. And that is really a very relevant topic du jour today, especially because of what has happened over the past few days on the markets with respect to things like, crypto, Bitcoin, a bunch of altcoins, Sol, ETH, DOT, XRP, you name it all. The traditional assets like Dixie, spot, gold, all kinds of different stocks, how they all moved around because of the volatility and the entropy and the probability and the statistics, which is the VEPS, right? And why is it that when you have days like we had Monday, Tuesday, and part of yesterday, Wednesday, or only a very early part, why is it that on those days fake trading gurus running around with their pants on fire, they buy this long now, it's the break of the century, or whatever nonsense they're saying, it's going to go to the moon, all-time high, and all this kind of garbage, right? Why is it they don't tell you about the actual thing that moves price? Why is it that they draw silly chart art instead of telling you that really what you should be looking at is the direction of the volatility based on returns, right? Standard deviation of returns and the correlation. Why do you think that is? Well, first of all, because most of them don't even know it. They're not even aware. And if they'd so much as, watch that video by Veritium, came out a couple days ago. It's like, I don't know how many hundreds of thousands, maybe by now it's millions, hundreds of thousands at least when I saw it a couple days ago. It was a nice primer video for people who don't know anything about Black-Scholes, people who don't know anything about randomness, people who don't know anything about the concept of using, math for trading, well, finance world, how derivatives are affected by these models, etc. Obviously, this was not a course about how to learn anything, which is great. It was just a good educational primer kind of video. Right? But even with that information alone, right? Fake trading gurus, because they've obviously not watched, or not, relayed the information that we relay and offer trading. And you gotta wonder, why is that? Right? It's the same, we're talking about the same concepts, right? Black-Scholes formula is what led to other understandings about how to use volatility, right? And entropy, which goes beyond Black-Scholes, right? And probability and statistics, and randomness, right? I always talk about GBM, geometric Brownian motion, randomness, right? It's not an accident that we look at randomness very, very much, because the markets are random, and most of the time the assets are moving randomly. However, sometimes they're not. Sometimes they're in trending moves, and each time frame has its own set of randomness and trending moves. Right? And you can see, look up on the 4-hour time frame, that when the pump started happening on Monday, pumped very nicely on the 4-hour all the way until it ended. And on lower time frames, it was pumping very nicely, on and off, on and off, on and off, multiple times, different time frames. Some of the time frames also had a trending move that basically lasted the whole time. Others had trending moves and randomness throughout the whole period, as is to be expected. And the higher time frames, like daily, it only started to be random, for example, on Bitcoin yesterday. Right? At the end of the pump, it started to be a trending move. But it actually wasn't a trending move. Right? Because then it failed to make the move up. I mean, you could argue, but anyway. So yes, on the daily time frame, that move up was on a random walk. But on lower time frames, it was on a trending move. Right? And on even lower time frames, it was on both random walks and trending moves. What is it that they don't tell you? These fake trading gurus, they don't tell you anything that's important or relevant. Do you know why? Apart from the fact that they don't know. Right, say for example, and we know some of them do, but say for example all of them have seen at least some videos by Alpha Trading and had learned a thing or two over the past number of years about how to trade something to do with the VEPs, or at least to know the concepts, even if they have no idea how it works. But to understand the names of the topics, right? And why these things affect price action, and why price action is a lagging indicator, and price action follows the returns, right? And the returns are part of leading information. Volatility is part of leading information. Entropy is part of leading information. That's why we use leading information at Alpha Trading, and we don't use the lagging information. Why do you think it is that they don't tell you that? If they know that, and most of them don't, but pretend they do. Because obviously if they don't, that's an even bigger problem, because they don't even know. They're such bad fake trading gurus, they don't even know what they should be lying to you about for their scam, for their grift to continue. And that's the answer is in that question right there. It's because their whole thing is a scam and a grift. So they don't tell you that, because if they told you that, you wouldn't be such a sucker for their scams and their grifts. What is their scam and their grift? First of all, they're selling you tools, right? Indicators that are garbage, built on lagging information. Right? They basically copy a version of some indicator, color it differently, and rename it and sell it to you for however much. Right? Maybe they change one feature, 2 or 3. Still all lagging information. It's all based on lagging information. Okay? Most of them are not trading at all, so what do they care? They're not using these garbage tools. They're just selling access to them. Okay? Next thing is because they're selling you access to courses, like psychology of trading. In other words, how to lose money and feel okay with it. Right? It's just terrible. Absolute garbage. The only psychology course you need about trading is win and repeat, right? And when you lose, remember how that feels so you don't do it again. Okay? And very specifically, the method for doing that is very simple. Take profits early and often, limit your losses, and don't be emotionally attached to your trades. Right? That's it. That's your whole psychology of trading course in a nutshell. You need hours and hours and weeks of garbage. It's all garbage. Just take profits early and often. Don't be greedy. Take your profits early and often. Grow your capital base one little bucket at a time rather than trying to build it all at once. Just take your profits early and often. Rinse and repeat the wins. Right? The more you practice and the more you win, the more you'll be in the habit of winning, the less you'll be in the habit of losing. Limit your losses, so any loss you have is minimal. It doesn't hurt you. Right? It should cost you literally nothing. If it costs you anything, it shouldn't be more than the cost of a piece of toast or something. Let it be nothing. Okay? And don't be emotionally attached to your trades. Because if you're emotionally attached to your trades, you're much more likely to be a victim of foolish human behavior, which includes making irrational decisions to guide your trades. And that's a big no-no. So again, why these fake trading gurus not tell you about things that the VEPs are based on? Because they're trying to sell you garbage tools, they're trying to sell you garbage courses, and of course they're trying to sell you links to their affiliates, like exchanges and things where they get paid in Bitcoin for all the money you deposit. They get paid a percentage, and I can tell you in many cases they get paid 50% of the deposit and up. So if you deposit $1,000, they'll get $500 of that. Right? And the huge ones will get even more. So, don't be suckered by these guys. Right? And oh, by the way, also your trades, whatever you spend on your trades, the exchanges will also give you a percentage of that. So as long as the exchanges want that influencer on board, it's in their interest to keep paying those influencers. How do they do it? If you don't lose money? Because if they only earn money when you lose money, then you are incentivized to be beaten. It isn't you are the incentive, right? You're losing trades. Now they will tell you, no, I'm not incentivized to see you lose because I make money as an investor regardless of who makes money, whether it's the house or the trader. But that's not true. Yes, when you deposit, they get money, but also when you trade, they get money, right? Based on your trade volume and the amount you win or lose. And the more you win, the less they make. It's that simple. So don't fall prey to whatever they tell you they're saying or doing, because it's a whole lot of hooey. Right? Their incentive, their interest is in seeing you lose. It's the bottom line, and that's why they keep pushing the same garbage over and over again. And you can say, well, they've gotten better over the years. Now they don't push that kind of relationship. Now they only get paid to onboard you. First of all, that's not true. Second of all, even if it were true, it still underlies the fact that their whole purpose is to onboard you onto an exchange that trades against you and knows very well how to take money away from you by doing things like offering you leverage. So don't fall for that, and learn how to trade properly by learning to trade the VEPs. And don't be a victim to traditional TA and voodoo TA fake gurus. All right, happy trading.